I hope we are all here, or at least the majority. I would like to welcome you at our very interesting panel, and this is Financial Ecosystem presented by Public Investment Sector. So I would like to invite Mr. Bjorn Zorn Giegler to moderate the panel. I just have to say that Zorn is from the Directorate General for Communication Networks, DigiConnect, from the European Commission, and he will be moderating the panel today. Please present the panelists, and I wish you a fruitful debate. Thank you.
Thank you so much, Lena. And thank you all for having us and for organizing this panel. We're really excited to discuss with all of you today the role that public finance plays to attract private sector investments and to move towards a public-private investment program that really makes a difference in terms of enhancing financing for innovations in deep tech in Europe. So it's a great pleasure for me to have the panel with me, and I will just call on every panelist to shortly introduce themselves. So please, David, why don't you start?
Thank you, Soren, and thanks for having me here on this panel. So my name is David Dena. I'm working for the European Investment Fund, which is, as you may know, the investment arm of the European Union when it comes to supporting innovation and SMEs across Europe in an intermediated mode. And as far as I'm concerned, I'm heading a team in charge of selecting and investing into VC funds when it comes to strategies related to technology and also specifically tech. So we are the largest investor in Europe in this segment as a limited partner into VC funds.
Thank you so much. Valentina, why don't you come next?
Hello, everyone. Hello also to the people there in Ljubljana. Unfortunately, we were not able to come over this time, but happy that we can be connected at least. My name is Valentina Grillea, and I work for a company which is called BWCon, but today I'm here as a coordinator of the DT2 Invest Launchpad, which is an initiative promoted by the European Commission, which aims to identify and brings together different actors on artificial intelligence and blockchain. And part of our activities is also organizing these type of sessions and also the following one. So I invite you to stay longer with us because we're going to have two really interesting panels on the financial aspects.
Thank you so much. Let us move to Mate from Seed Banca.
Thank you very much. Good afternoon, everybody. My name is Matej Zaler, and I am Deputy Director of European Programs and Product Development Department at the Slovene National Promotional Bank, Seed Banca. I have been working vigorously on private equity financing for the last couple of years, especially with introducing the SEGE program, Slovene Equity Growth Investment Program, that we are having together with EIF. And we are expanding this year the equity program to other programs, and by basically making the size of the program twice the size it was initially intended.
Thank you so much. Last but not least, I hand over to Chris, who represents the VC community on this panel. Thank you.
Thank you, everyone, for having me here. My name is Christopher Petzel. I'm a partner at Percival Ventures, which is a Puerto Rico-based venture fund heavily focused on blockchain. Our principal was involved in many of the big name transactions in the blockchain space, instrumental in forming Block One, EOS, Casper, Tether. I'm currently in Los Angeles and delighted to be here.
Well, thank you so much. Great having you all. So let's start with one of the big challenges we are facing in Europe. So which is the market and the market investment gap. So as you all know, basically the Europe is not leading currently in terms of investments in deep tech. So there, just to give you one figure, while there are around 32 to 35 billion investments in artificial intelligence per year in North America, there are around 12 billion in Asia. According to our latest figures, there are around 4, maybe 5 billion in Europe. It's growing rapidly in Europe, but we still face a very important investment gap. So I wanted to ask all of you, how do you see the market in Europe and the opportunities we have, but also its challenges? Maybe David can start us off on this question. Thank you.
Sure, thank you. I would say as a starting point, I would make the distinction between investment when it comes to innovation in a generalist way, I would say, contrary to what it is about deep tech, as you were referring to. In terms of innovation, European market has grown a lot, and I would say exponentially over the last decade. When I joined the EIF a bit more than 10 years ago, we were making 300 to 400 million euro investment a year into VC funds, and it used to represent up to 40-45% of the overall EU market, which was huge in terms of shareholding of the market. Last year, we signed 1.6 billion euros, which is much bigger, but it represented only, in a way, 12 to 13% of the EU market. So it gives a bit of perspective in terms of how the market has evolved. But this is when it comes a bit more to an early stage, Series A and Series B type of ICT investments, generally speaking. Now, if the question is more about deep tech, here we have, I would say, an issue which starts from the fact that we have the brains in Europe. We have a lot of very and highly skilled people that developed, disruptive technologies that are not only disruptive by nature, but they're also disrupting business models and markets as we know. But the issue is about funding. There's also always been a difficulty in Europe transitioning from research to market. And we see now, I would say for the last 24 months, we've seen more and more people claiming to be investing into specialized deep tech strategies. And we will come back on this later. We have developed EIF in partnership mainly with the European Commission, specific programs to finance those strategies. But this is still, in a way, a nascent market, and we have a lot to catch up when we compare to other continents. You're on mute, sorry.
Maybe Mate, how do you see this from your perspective, particularly also from Slovenia? So how do you see the market? Because I know that your programs have actually taken off tremendously in the last couple of years. So do you think we fully reap the benefits of those opportunities, or is there much more potential there which we could develop further?
Well, I think there are two sides to Europe. There are some centers like Berlin, Paris, etc., and Luxembourg, obviously, the Netherlands. And then there's the suburbs like Slovenia. And here, the market is really, especially when it comes to financial instruments, it's really heavily underdeveloped. And when we started the CG program, the Equity Growth Program in 2017, we had one major concern, and this was that we will not have enough pipeline, because although it was a generalistic program, the generalistic fund, it was strictly limited to Slovenia and just a portion of it outside of Slovenia. And our concern was that there will not be enough pipeline. But the truth and our experience is that there was actually too much pipeline, and the fund managers actually had a problem distributing funding to final recipients because they were in a position that they could do some cherry picking. And if you want to cherry pick among such a vast pool of potential investments, it takes actually a long time to choose the companies and make the transactions. And I think it's pretty much the same with every type of investments in Slovenia and in the region, actually. And I think that the role of the promotional banks, such as ours, is essential because we are basically doing the innovation in the market. Because at the moment, for instance, since we are a bank, we had to invest in a collective investment undertaking, an alternative fund, etc., all these attributes. And this was a type of investment that wasn't known to our regulator, for instance. So we were able to get the regulator acquainted with the type of investments so that now the regulator knows if any other bank would want to make a similar investment, they would not have to go through the same turmoil of clearing up the issues of capital requirements and stuff like that, because we already solved it. And it's a cost that is unacceptable actually to private investors, and is something that is easily borne by the promotional bank. So a lot to do.
Thank you. Great opportunities and fascinating programs you are coordinating. But let's move to Chris. So how do you see that, particularly in blockchain? How is the market in blockchain developing, and what are particularly its opportunities? Because now there are several VC funds that focus exclusively on investments in blockchain, which is a new phenomenon, which didn't have a couple of years ago. Thank you.
Yeah, I mean, I very much agree with my fellow panelists in the sense that there is a tremendous amount of skill set in Europe. As a matter of fact, at our own firm, which is based in Puerto Rico, half the partners are European. We do a lot of work on the tech development side with the suburbs, as Matej called them. And so there is a natural affinity towards Europe, towards the Eastern European part of Europe. I think the challenge is a little bit kind of bridging this communication gap between the private venture world and all of the opportunities that are available. So, you know, it's always good to get a helping hand from somewhere, but you have to understand how to ask and understand, you know, what people are trying to achieve. So, you know, specifically, you know, how I arrived at this panel is to see an enormous opportunity, but understand also that it's going to take a little bit of a learning experience to understand what is available and, you know, what my counterparts at the governmental level are looking to achieve and how to sort of engage with that process. So I think, so big plus is skill set is there, work ethic is there, the desire to innovate, do new things is there. You know, I've had nothing but the best experiences with working with the region, but to then actually understand, you know, how to tap into some of these programs that are available, which I think could move a lot more activity if that communication gap was bridged.
I think we should follow up on that. Valentina, from your perspective as the coordinator of a European Commission program that supports investments in AI and blockchain, like what were some of the biggest surprises actually for you in this topic? And what Chris just mentioned, you know, this making connections between public and private institutions.
Yes, actually, I was already smiling because it's actually what we have seen in the last 2 years. Just maybe to explain a little bit what was the main scope of these initiatives was promoted by the European Commission in order really to make awareness about the investment piloting on artificial intelligence and blockchain. And what we really discovered, started to talk to the people speaking about private investors, but also public governments and national banks, is that there was really a knowledge gap, that most of the people were doing the same things, but not really talking to each other, not really being aware of what were the opportunity outside. This pilot could be the first one, but also some other national programs banks are doing something similar. I can make an example of Germany, where we have organized an event, a market consultation. We brought around the virtual table all the key players active in the deep technology investment ecosystem. We invited someone from the European investment funds. We had someone from KfW, but also from the ministry, who is also investing on the new deep technologies funds in Germany. And actually in parallel, there were a lot of private investors from Germany doing more or less and investing in the same sector that were not yet aware of what was, let's say, decided top down from the government. So, and the wish and the output of these events, of these initiatives was really to be more connected, to be more in line and let's say align on the different programs, and to try to reduce this knowledge gap that was mentioned before also by you, Chris.
Okay, great. So now what is actually the EU doing, right, to address this challenge? So we have, as David already mentioned, created 2 years ago this dedicated investment program. It's the first and only program in Europe right now that works at the European level to finance innovative startups, SMEs, for artificial intelligence and blockchain. So it's a huge deal for us. Why is it such an important thing? Because I think, as David pointed out at the beginning, there is a lot of investment in Europe, but when it comes to deep tech, we have a challenge. And so in order to address this particular market, we created this specific program. But handing over to David, what is this? How does it work? And what maybe are some of the lessons learned from this particular fund?
Yes, no, that's definitely something which has worked very well. This is actually, it was a pilot program of 100 million euros, which was designed at supporting ultimately companies active in the AI and or blockchain space, with quite frequently some overlaps in between. It was something, I said it was because as of today, we have utilized all of the resources allocated to this program, but the upcoming European programs, notably InvestEU, will have a strong focus on deep tech and AI and blockchain specifically, but it will be a continuation of those programs, which were, as I said, pilots to make sure that there was a market demand, that we were able to address it. So this was a program which was designed as being utilized either through our core business and activity of fund-of-fund investments or as co-investments. We used it only once for a co-investment because at the end, the leverage was much more important when invested into a fund, which then had to raise additional money. And then when the money was invested into ultimate beneficiaries, so SMEs, it was very common that those funds which benefited from the support of this program were also co-investing with other private money, so sources of private money. So it helped a lot, leveraging a lot the money available for those companies. So what we've done with that, besides this co-investment, we had invested into 13 different funds. There was a 14th one, but it didn't materialize because of the current pandemic situation, which did not allow them to raise enough money to become live, I would say. But this was also something really attractive. And what we are very proud of with this program is that not only we backed managers with a partial focus on AI and our blockchain, but also some highly specialized investors. What is very true as well is that the AI market is still more developed and more mature than blockchain for sure. So there's a stronger part of the money which has been allocated to investors that will deploy it into AI companies. But we have backed one fully specialized blockchain investor. I can disclose the name because it's not a secret. It has been published, so it is Fabric Ventures. And we also backed other funds, some of them having a dual strategy between AI and blockchain. So all in all, when it comes to blockchain specifically, there has been quite some, I would say maybe around 30 million euros at least at our level invested into dedicated strategies for blockchain, with all the multipliers I was referring to reach at least a level of 150 to 200 million euros for blockchain companies. And on the AI front, it was the remaining, which was split between specialized funds, again, deep tech generalist funds with a strong focus, or more, I would say, bigger and established funds with a strong focus on AI as well. And some of them also to a certain extent on blockchain. So all in all, the money has not been allocated to only emerging teams and neither to only established teams. So we have built a kind of balanced portfolio in terms of segment focus, stage focus, but also in terms of geographical coverage, because the money has been invested into managers established in Luxembourg, in France, in Germany, but also in Bulgaria, in Greece, and in other CEE countries or Southern European countries. So all in all, it gives a nice patchwork of what Europe is really, meaning that innovation comes from everywhere. And we also, as an investment agency for Europe, have a developmental role to help what we call underdeveloped market, but without the pejorative aspect, to get additional funding to support local initiatives.
Okay, well, thanks so much, David. But just to clarify, though, the total investment volume you're reaching with the fund, how big is it now? So with 100 million from public money, how much money you were able to raise, say, from the private investors?
On average, the funds that we backed raised at least 2 or 3 times more than what we invested. So it means out of the 100, it reaches already approximately 400 to 500 million euros at fund level. And then when it comes to the companies, given the fact that those funds do not invest alone in the companies, it's at least twice this amount. So it's more than 1 billion euros at the end, which has been made available thanks to this initiative, because for at least half of the funds, we were a bit larger than representing larger parts than 1/3 of the funds. So without this money, there wouldn't have been those funds. So this is clearly creating players to support those initiatives.
Okay, let's jump to Chris. What would it take for you or others to co-invest in these type of programs? How do you see that?
Absolutely. I actually had a question for David. So you focus predominantly on funds, or do you also sort of do direct investments in qualifying enterprises on a one-off basis? What's the strategy there?
I would say 98% funds.
98% funds. Okay, yeah. Well, that's I guess that would go part to answering the question, which is again, at first is sort of say, what is the opportunity? How does one have to structure it? We think there's a lot of opportunity in the region, specifically with the expertise of creating things on the tech side. I think sometimes focusing on what the market's looking for and the market acceptance, I think maybe there is a little bit of a different perspective where we can add a lot of value. But from the kind of programming side of things, obviously you have stellar resources in the region at great prices. And so, I mean, we're very actively looking about how we can basically collaborate with people on the panel in order to create sort of a structure where we would bring the private capital and leverage it and better understand, what the requirements are for the capital, both to trigger the capital and how to recoup the capital. So my next question, I guess, in answering this is to David, which is, when the private money comes in, is it pro rata pari passu? Is there some sort of preferred recoupment for the private capital or the public capital? How does the money basically, when there is an exit transaction, how does the money get recouped?
Very basically, this is a purely private mode when we make investments, meaning that we are lucky to have a very strong pipeline which addresses our policy objectives of developing sectors and geographies. So we are in a luxury position of selecting what seems to us, based on our experience and skills, the most relevant players and setups to generate the higher returns, combined with the highest policy objectives. So this is the way it works. Then typically we represent a certain percentage. We can theoretically go up to 50% of any fund size, but for the market to be really, working in a coordinate way, we prefer to represent a bit lower, but to make sure that those managers that we back raise money. So it may be that at first closing we would represent more, and then either decrease our ticket or the manager will have to raise more at a certain stage in its development. But the very strong component we have in a recurring way is a focus on EU, investing into EU-based companies, because as you said, we have huge resources in terms of brain and skill set and technology development and research and development. Basically, we have I think Europe has the highest number of engineers in the world, even more EU only when you combine the US and most of the countries of Asia. So we have a lot of raw material, I would say. Now, the next step is to make it become professional and marketable in a way that it will allow the emergence of European champions at a global level.
So from a private perspective, if we deliver $20 million in funding, just for the math, just to do the math here, and you come in with a third, so 10 and 20, does that money get treated equally in terms of recoupment?
Yes.
Is it basic?
Yes.
There's no preference of one or the other?
No, we are promoting a pari passu treatment. Same risk, same reward for everyone. Yeah. And we are not here to give grants. We are here to make investments in something which will attract private money. So it has to be following the market rules.
So that answers the question in terms of recoupment. What about control?
In which way?
What kind of rights, like let's say you're a third of a fund, what kind of rights do you want to exercise in terms of capital allocation, green light of investments, or are you more passive once you've made the choice to participate in the structure?
No, we like to say that we are an active LP, meaning that we are on a very regular basis in contact with the managers. And you cannot imagine how many emails we receive on a daily basis to talk about any kind of topic. We have the regular, for instance, advisory board where we usually ask to get a seat, and we are sitting there on each time needed. But we are also very regularly consulted, because over the last 25 years, when we were created, we have invested in more than 700 firms. So we have some experience and some lessons learned to help people either avoiding making mistakes or helping them going into the right direction. What we typically ask is that the managers that we back have to be able to allocate a strong part and the largest part of their capital into EU companies. And then, if this is the case, and if we find the case attractive also from a commercial perspective and fitting also with our policy objectives, then we have what we call our magic triangle. And then we can process the deal and perform our standard investment process.
Great. I think what we see from this discussion, right, is that private-public partnership, like how that can be facilitated, and that we have to come together among all stakeholders in Europe to have a concerted effort dedicated to deep tech. Because if every actor acts by him or by itself, we will never be able to really compete with other regions such as, say, the US or China. So, but I want to come back to Mate, because you actually have implemented this, right? You have this very exciting program together with Croatia on the ground, where you work closely with the EIF and private investors to set up these tech funds. So what are some of the ingredients of success? Like, what makes this work? What might be early lessons learned from you from putting in place this? You just mentioned, I think you have a 40 million euro fund you created jointly between Croatia and Slovenia, which we always thought was best practice from the EC perspective. And what is the secret of success? And if not, what are the key challenges? Thank you.
Yeah, thank you. Well, I think one part of the success is the fact that we started a CGIP program in 2017, and Croatia followed on with their own equity growth investment program called CROGIP in 2018. Now, both programs have been, well, it's safe to say very successful so far. And the red tape concerning the collaboration between EIF, HBOR, Croatian Promotional Bank, and Seed Bank has not been such a burden, because we are only doing a top-up of existing collaboration that we already have with the EIF. So that is one part. The other part is that we have been working closely on the private equity platform that EIF has. It's a board that takes place once or twice a year, I think, and it's a sort of an advisory board to the EIF equity platform, and both Seedbank and HBR are working there. So we have been working very closely and following up and exchanging details surrounding the performance of the equity program. Now, this year we have decided to do the top up for the tech transfer platform, whereby we invested 10 million, Croatia invested 10 million, and EIF came with 20 million, out of which at least 15 million need to come to end beneficiaries in Slovenia, 15 million to Croatian end beneficiaries, and the rest is divided to whichever projects are the best. So there's no ratio requirement for the rest of it. And whatever private investors come up with, also the end size of the fund is divided by the two countries independently by the fund manager. I think that is the success of the equity program is important. Also that we have opened many doors in terms of trust and legal frameworks and stuff like that for private investors as well. They have become aware of the opportunity that they have to invest in a private equity fund or a venture capital fund based in Slovenia or managed by Slovenian managers, Croatian managers, just local managers in particular. The important part is that the tech transfer is quite specialized. Basically, it's supposed to invest in projects during their pre-seed phase. So while the projects are still with the research teams at the public research organizations, so the investment period is supposedly going to be pretty long, because most of the number of investments are made in the pre-seed phase, and then the fund is supposed to do the seed phase and the Series A financing. So all the follow-ons will take place obviously later on, when projects reach their adequate phase of development. And there is a total gap in tech transfer in Slovenia and Croatia. Public research organizations have been really struggling getting their research commercialized. And this is basically, and also when we introduced the program locally, there has been great traction coming from the science community saying that this is perhaps something that is the best thing in terms of financing that has happened to Slovenian and Croatian science community in the last 30 years. So, so far we have had great traction. We know of a couple of interested parties that want to apply to the EIF call as fund managers. We have currently, it's more than 4 at least. And we have seen some of the potential pipeline. It's looking very good. It's generalized, but it does include blockchain and AI. I can confirm that. If the deals will close or not, that's the other point. But it has been quite a success. And also, we have been receiving some calls from potential investors, actually, from local investors from both Croatia and Slovenia lately, after the publishing of the fact of the call from EIF, that they have excess of money, that they have problems investing, and they are looking for investment opportunities, and they are interested to support the environment, the local development of the local environment, and they're even actually willing to do some, what we might call impact investing. So it's going good so far.
All right, thank you so much for sharing from this. Valentina, you have been coordinating a lot of market consultations with startups and also with investors actually around all of Europe. So what are some of the things you're hearing from them, and what are more concrete recommendations actually to us in terms of policy and setting up these programs?
Yeah. So actually, the last suggestion from Matei, I've heard a lot, especially from investors that are benefiting from the European investment funds, but also that have some private LP. The fact that the money is there, what is missing in some cases is not the cases for all the startups, but in some regions, it's really good teams that are mature enough to access also different markets. And what is the limitation is the regulation, especially with regards to the blockchain in investing, especially in different countries. So this was something that was constantly repeated by the venture sides. On the sides of the startups, as we also approach them in a different way, we have also done a survey. We have also identified the most promising startups, and we are going to publish a portfolio in the next months, also for both for blockchain and artificial intelligence. Some, let's say, recommendations for European Commission would be, of course, to try to reduce as much as possible the bureaucracy, because anytime they are, let's say, exposed to opportunities, public funding, there is this big issues related to the bureaucracy, and the fact that the access to Series A and Series B money is still maybe more Series B money is still in Europe quite a challenge. And this was also, let's say, reinforced by the venture sites, which let's say as soon as they want to follow up with a bigger ticket investment, speaking about 5-10 million, they were, let's say, complaining the fact that maybe the big corporates, they are still not mature enough to open up the doors to big type of investments. These were the main lesson learned that we have collected until today.
All right, so great. It was mentioned now several times again by a few of you, by all of you actually, the research and follow-up, right? So how do we bridge this gap from research to commercialization? Because still today, a lot of our best researchers, right, a lot of the best know-how is actually commercialized abroad. So there's just like a story of today, you know, Lilium startup in Germany goes to NASDAQ to go public. So many startups still, when they go public, they go to the US. So maybe Chris, you can start us off in this discussion. How do you think this, what is different to the US? What should Europe really learn to better commercialize? Well, we have this fantastic research, yeah, we have the fantastic engineers, but we are not yet as good in commercializing our innovations.
Yeah, I mean, you mentioned NASDAQ. I think in terms of high growth companies, we would still look to the US capital markets to provide both the capital and the liquidity you know, for those companies. That's not as pronounced in Europe. You know, over the last 10-20 years, you know, Germany and other countries have tried to launch sort of NASDAQ type markets with, you know, not always the greatest degree of success. And so I think the overarching theme here is that, you know, Europe has the expertise, it has the governmental will to support the ecosystem. It probably needs to develop a little bit more on the financial infrastructure side of things. And catch up a little bit in terms of those instruments, and maybe that is also sort of embracing a little bit the risk. You know, the European culture is a little bit more risk averse. It doesn't tend to value someone trying and failing. as much as in the US, somebody said, well, he tried and he didn't make it, but maybe he'll make it next time. Whereas in Germany, sometimes it just stops at the failure, saying, well, he failed, so that's next person, please. And so that culture, but I think it's changing quite a bit. And so I'm quite positive on where things are heading. But venture, by definition, you have to embrace failure. You have to be okay with somebody tried and they didn't get there, but maybe next time they will.
Actually, we got a very interesting question from one of the participants. Thank you so much. It's about the experience in the US with small business act, small business administration. And so is there more money flowing from public resources into startups?
Well, I mean, we've had a number
of
programs. We've had a number of programs from, due to the pandemic that have been introduced, including a number of them managed by the SBA. The Small Business Administration is still, at least if you look at the traditional programs, a relatively cumbersome program. So it's not sort of an easy program to access. I wouldn't sort of say that, hey, this is a stellar example on how to do it versus what's going on in Europe. That is probably the closest you have to the European type programs in the US. Lots of paperwork. They kind of very much look to kind of personal recourse. A lot of times people use property as collateral. So there are those programs, but they're also not as easy to access as you would think. But the SBA recently has administered the Paycheck Protection Program and some of the other programs that specifically came up to help the economy due to the pandemic. So you have to kind of separate those two aspects.
Maybe over to you, David. How do you see this commercialization gap? Do we have a gap in terms of commercialization or not?
I think actually we have a couple of gaps. As I said, the early stage segment in Europe works well, and we can only see it by the increasing number of unicorns, even though it remains paper money until the exit. But I would say the main gaps are first, and importantly enough, on the R&D part with this technology transfer side of the business, but also, as Christopher referred to, when it comes to growth investment, we are still lacking in Europe managers with large enough funds, and by large I mean of 1 billion or more, which would allow them to sign checks of 50, 60, 100 million euros into a single company. This is not something we see in Europe. We have maybe 3 of that types in Europe. We will need at least a dozen, if not more. And maybe the last gap, and this one is maybe partially also related to cultural BAs, I would say, the exit market. It's still largely happening in the US. You were mentioning the IPO on NASDAQ, which comes also because this is a much more dynamic and liquid market with many analysts following it, maybe more than what we have in Europe. We still do not have a large capital market in Europe. We have national ones. We have one in France, one in Germany, in other countries. We should have a bigger one. There was a temptation of getting a much bigger one a couple of years ago, which didn't materialize between Berlin and London. Now, London is a bit more complex, and we will not go into this direction of this B-word topic. But basically, we are lacking an exit market in Europe, which comes partially with IPOs, but also with a change of mindset of big corporations. We still see 90% of the exits happening in the US, led by US corporations. Where are the European ones? Many of them have resources, would have a huge strategic premium by acquiring those new companies, innovative companies. They don't do so. They do not do so. When we saw a large corporate acquiring a startup in Europe a couple of years ago, it was in the magnitude of 200 million euros valuation of the company. The same company in the US would be getting at least 4 or 5 times more money. And for sure, as an entrepreneur, we can understand that there would be, after having spent lots of years, hours, every day, all their life dedicated to the companies, that they would be going for the ones giving the biggest reward. This is something, frankly, I just don't even know how to make it change. but this is something which would change the paradigm if we had an open market for exit.
Well, thank you. So from our side, the Commission side, we also, of course, acknowledge this very important challenge. And I wanted to share with everyone, we have launched this DISC program, Digital Innovation and Scale Up Initiative, which is specifically supporting countries Central and Eastern Europe in the scale up of startups. So there basically is a program within the InvestEU to really leverage opportunities, because we have seen that many of the brightest minds and a lot of these startups, actually 45% of startups, successful startups in the region, I mean Central Eastern Europe, are unfortunately relocating. So it's not just UiPath from Romania, which some of you might know, but also blockchain companies are being get a lot of incentives to basically work outside of the EU. But we are taking action, and that's why we have now also this next scale up of the AI blockchain fund, which is on the, we are just discussing that, how we had put in place the strategic digital technology fund. So, but coming back to Mate and how you see that, you said there was first, I was really struck. You said something very interesting, that you said when you started out working on these funds, yeah, on these programs, there was no pipeline, or you thought there was no pipeline. So our own findings is we found a tremendous pipeline in countries like Slovenia, Croatia, Bulgaria. So what is it now? Is there a pipeline or is there no pipeline?
Yeah, thanks for the question. Actually, there was too much pipeline. We were concerned with the private equity program, which is devoted for growth equity for well-established companies. In 2017, when we started off, that there will be very little pipeline, or that the quality of the pipeline will be questionable or something like that. But at the end of the day, it turned out that there was actually too much pipeline. The fund managers were struck, you know, driving all over Slovenia and finding out how many innovative, commercialized opportunities there are available in Slovenia, actually, that nobody was aware of. So they were able to do the cherry picking of their investments. We believe that we will have a very similar situation actually with the tech transfer fund. What we've seen so far, example for a potential pipeline from just the Slovene biggest research institute exceeds 80 potentially very, very useful and commercialized ready opportunities. And this is only one institute. So there's really, really a lot going on. There is the researchers are, in terms of their academic profile, are very, very successful, but their innovations simply don't reach the real economy. And this is what we are trying to address with the tech transfer platform. And the same goes for Croatia, actually. And just in the recent years, I have to say that, for instance, the tech transfer offices that are established within the universities and research organizations really, well, doubled or tripled the number of employees in Slovenia, for instance, especially in order to deal with potential financing. So we are slowly setting up the entire structure and hope to see some deep tech situations, deep tech investments as well. However, if we did venture eventually into deep tech specifically, we would have to broaden the region. Absolutely. Even with the tech transfer, we had to enhance from Slovenia to Croatia as well. So it's not entirely local or limited to just one country. The more specialized we go, the broader we need to have the region that we want to cover. So this is something that will still have to be done. Exactly. Market size in order to, get the private investors interested into investing as well. They don't want to be too much exposed to just one market and just one focus area. It gets too risky for them too quickly.
But may I ask you, and Valentina, please jump in. Are we still too focused on national markets? I want to share with you quickly, like 2 years ago, we took 100 startups from Central Eastern Europe to Slush in Finland and connected them to a complete different ecosystem in Finland, Sweden, and Scandinavia. And we were really amazed how fragmented still the different innovation ecosystems are inside of Europe. So isn't it that we just have to better connect the different ecosystems? Maybe a question to all of you, but Valentina, maybe you can also jump in here.
Yes, I don't know if Mate, you want to start to follow up with Slovenia?
Happy to. Actually, yes. I think, thank you. I think that, the diversity of jurisdictions in Europe is a problem. For instance, in Slovenia case, and for Croatia most likely, and for Romania, Bulgaria, countries like that, lack of knowledge is also a problem. When you have to deal with bureaucrats and regulators and stuff, they are not aware of the type of investments that you want to be doing, what's the tax treatment. There's lots and lots of difference there. It is also very difficult, and this is what we have been hearing from potential VC fund managers, because we are topping up CGIP with a VC program as well in a couple of months. They're saying that if you want us to have a fund registered in Slovenia, then we will have a great problem getting investments from foreign institutional investors, which I agree, right? But if we don't get the funds registered in Slovenia, then we will never have, the infrastructure to support such funds in Slovenia, because now we have some legal framework on how to set up a fund, but there is no tax treatment for such funds, which for investors obviously is a problem. But if we don't, we have to start somewhere. So it's a question of a chicken and an egg, actually. And what we want to do as a promotional bank, and this is not being nationalistic, but it's actually having to do with what directives on an EU level want to do, basically to unify the approach throughout the entire Europe. And this is what we want to do here as well. If we get some baseline on which we can, build the infrastructure, then eventually we will catch up. But if we allow for, companies and investors and etc. to just simply move from Slovenia to another EU country, I know it's still good for Europe, but it doesn't really address the issue of equal regional development, so to say.
Well, thank you. So we have 5 more minutes, so I want to give every one of you one very short minute. So
very short from my perspective, yes. So we talked and we are talking to different ecosystems. So and for sure we are based in Germany, and every time we raise our hand and talk to someone not from Germany, they always try to, let's say, be exposed to our ecosystem, because we are quite good in bridging also the gap between the industry and the investors and the startups. What we have seen especially in the East countries, is that, of course, they do have the knowledge, the skills are there. What is still missing, based on what we have seen, is really the connection with a lot of sales competencies, what they still do not have at startups level, and the connection also with the corporate that are willing to work, not only invest, but also to work with them. So the fact that before David was mentioning to have a single market, of course, ideally, this could be a kind of solutions that might, let's say, reduce this type of gap. And yes, this was I wanted to just mention on this side.
David, maybe, or Chris, please come on.
Well, I mean, basically, I think, you know, like listening, it was a great panel, and I really look forward to sort of continuing some of these conversations that we started before and continued here. You know, sometimes the way you start a venture ecosystem where it doesn't exist yet is you think in terms of a fund and multiple investments, but maybe you focus on taking a group of people that are used to kind of doing more, but maybe you focus on one or two specific things. In other words, you don't actually have a fund yet, but you get together to sort of do one or two specific investments with the idea of growing into a fund. That's sometimes how people that are starting to put together, you know, a venture vehicle, they just start with kind of building a track record. So in terms of what Mate was saying, maybe the focus is to find, you know, a few really interesting opportunities, and then pulling in international, European, and outside resources to actually sort of, you know, start to anchor those resources to the region and saying, hey, if it goes well, let's build out from there.
All right, David, I think you have the last one.
Yeah. Okay, thank you. Yes, something which actually, and it comes back to one of your questions on the lessons learned. I agree with everything which has been said here. We should try to do more, but at the same time, we shouldn't be less demanding towards opportunities coming out from the underdeveloped and underserved regions. Because if that was to be the case, then we will not find private partners to join us and support these initiatives. So we have to apply the same standard, the same level of requirement, and it might be even more difficult. The threshold might be even higher for those teams which are just emerging. But as I said, we have a number of them in our pipeline at a quite advanced stage, and we see things which are definitely really captivating. And we are convinced that if we, with our experience and what we see, on average, we see more than 400 opportunities a year, but select 40 to 50 of them. So if we, with this experience and with this helicopter overview, as we say, are still captivated by new initiatives, new teams, new strategies, we will not be the sole ones. So we will still apply our usual quality filter and apply the best market practice that we have been supporting to develop in Europe. And hopefully it will help the market to further develop and catch up with the other geographies.
Thank you so much. Thank you, everyone, for this fantastic panel. And we're handing over to the great organizers of the European Blockchain Week. Thank you again.
Thank you, everyone.
Thank you. Bye.
Bye.
Thank you.
Thank you, everybody, for this really fantastic panel. I wish it would last at least for half an hour more, but now I'm sure that we will listen to the also exciting panel about private financing blockchain ecosystem. So I would like to invite Ms. Helen Kopman as a moderator from Unit Digital Innovation and Blockchain European Commission to present the panelists and take up the moderation of the panel. Thank you. Hi, Hannah.
Thank you. Hi, Nina. Thank you so much. And thank you for inviting us to this very exciting panel of entrepreneurs and venture capitals to come and tell their story about the private side of the story. So we have heard the public financing, and this session now is going to concentrate on the first-hand experience of these entrepreneurs and investors regarding the improvement potential and best and worst practices in the blockchain and AI space when it comes to both developing a business and developing the ecosystem and the investment community around it. And we have a very interesting lineup of speakers. On the entrepreneurial side, we have Sarah Diane Eck, who is CEO and founder of Surprise. She will tell a bit more about her company. We also have Harry Behrens from Blockchain, who is also a founder and chairman of that company. And in addition, he's also a chief technology officer in the same company. And on the entrepreneur side, we have the third experience being going to be related to us from Alan Lipsus, who is project manager at Probit, but he is in an early stage of development of his company. So that will be very interesting to hear about. And on the private investment side, we were joined by two investors. We have Alan Falis, who is an investor, a venture investor at Fabric Ventures, a very specialized fund in the blockchain space, and Rick Howe, who is from Speed Invest, more broad and the perspective of deep tech investment, both in blockchain but in other technologies. So with that introduction, I will also see, do we have Valentina here?
Yes.
Yes. Hi, Valentina Grille. Thank you for joining us as well.
Thank you very much. Thank you very much. And I can close the bridge between the two sessions, because I had the privilege to be part also of the previous one, where I also started to introduce shortly the DT2 Invest. And if in the previous session we focused mainly on how the European Commission supported the public ecosystem through the artificial intelligence and investment funds, in this session that we are going to start now, we will mainly focus more on the private side, as Ellen was mentioned. I will take the freedom, if the tool will support me, is to show quickly a few slides to complete also the discussion of the last and the previous sessions. So actually everything started more or less 3 years ago, when the European Commission and the European investment funds decided to bring together the effort in putting for the first time a first investment funds, a pilot on artificial intelligence and blockchain. And I'm not going to mention the numbers, has been deeply discussed previously, but if you can refer also on our website, you can see all the references and also all the private ventures that have been funded by this pilot. And we are more than happy to have two representatives in the session of today, so I will not say a lot about this, but what is important is that our initiatives came really as supporting actions to the pilot investment funds to try to really reduce the biggest gap that has been identified, which was really a knowledge gap. The fact that everyone, or a lot of actors, both for the private but also for the public side, were really active already in the artificial intelligence and blockchain investment, having some national initiatives or maybe also cross countries initiatives. And the idea of the DT2 Invest was really to talk to all these peoples. We have run surveys in the previous years. We have done a lot of market consultations, and what we have done is also kind of a mapping of all the investment and public supporting and private initiatives that several countries have developed in the last years. You will find everything on our website, so if you want to go back on some country analysis on the different member states, but also on some specific learning materials that we are going to develop with also some key players and key experts from all over Europe, which will be ready in the next months. And last but not least, and the session of today is really the well representation of what we try to achieve with DT2 Invest, is really to reduce the gap and to increase the awareness on the ecosystem. And we have identified the larger group of investors that have already working in the artificial intelligence and blockchain. And we are going also to identify a portfolio of companies, 100 from blockchain, 100 from artificial intelligence, which will going to be pushed and will be proposed also for investment to the European venture capitalist partner. These are my contacts. If you have any other questions, I will be in the panel, but just as a supporter, let's say, not really taking a lot of stage anymore. So Helen, back to you. Thanks.
Thank you, Valentina, and thank you also for making the bridge to the previous session. So we understand the different perspectives here. I think I'd like to kick off this session with starting with Sarah Dianek, because I think it's very interesting to hear from a young entrepreneur in this space, but still have done a bit of a journey already with her company. About her story, what kind of experience you had when you developed that, and what do you see as the ecosystem challenges of development of a blockchain company in Europe? Over to you, Sarah, again.
Thank you, Hélène. Hi, everyone. So yes, I jumped into this ecosystem 5 years ago. At this time, I was working at a digital marketing company, and I identified some use cases to have the opportunity to create mutual customer engagement program thanks to the blockchain. I met at this time my co-founder, and I started to be really active in the blockchain ecosystem, went to various conferences and so on. And we had at this time a lot of support from the ecosystem, as it was one of the first and maybe the first use case of rewards onto a blockchain. So we created a team of engineers, developers, specialized in blockchain technology in France. And we launched Sandblock, which was the first protocol that we launched on the Ethereum blockchain. After that, we restructured everything, and we decided to have our own blockchain based on the Cosmos SDK, and have an independent use case. The reason why we did that, and it's linked to your question, Hélène, is that we had a lot of difficulties to raise funds for crypto-based, token-based structure. And we had also difficulties to make retailers and corporates using this open source protocol. So we decided to let this open source protocol on its own as an independent structure. And we created another structure called Surprise, which was capital-based, which is a use case using the protocol with an independent team and a capital-based structure. So we restarted this story to have the ability to enter into the investment grid that was understandable at this time. And it was actually a good decision because it led us to made an exit of Surprise at the beginning of the year to one of the leading group in customer reviews and engagement, which is interested to use the protocol we developed for all the reviews they are storing to insert trust and transparency, and also to create a new reward system for people who give their review, give their feedback, and create value. So I try to put everything in a nutshell, but the key takeaway that I can tell right now is that what I saw in this evolution, because those last 5 years were really evolving fast in the blockchain industry, is that we went from a point where the blockchain crypto space was really on its own with a specific and dedicated ecosystem to a bridge where now we have one big group, actually one of the 40 most promising startups in France that make an acquisition of a blockchain specialized startup.
That's super interesting. Thank you so much, Sarah. I think that's a great backdrop and start to how a company can develop. I think we should go back and ask some more questions what you think about that type of development for other companies as well. What could be the things we can do to help other companies develop in the way you've done, and being able to pivot and change their business model into a market fit. But perhaps first we'd like to hear also from Harry Behrens, and it's your company is Bloxmove. I hope I'm pronouncing it right now. Otherwise, you will correct me, Harry. And tell me how I understand your company is active in the mobility services space, like mobility as a service, and how blockchain is applied to that. And I think that's a very, very important vertical that is developing right now. I mean, we've seen from financial services, blockchain technology being applied into more and more sectors, and definitely mobility, energy are sectors that have huge potential. And very interesting to hear what you have done with your company. And
yes,
same for you, how you see the ecosystem developing around that vertical.
So thank you. So the sectors are actually, and that's the name of the company behind Bloxmove. So the company is called Power and Mobility, and that's for a reason, because that's the two sectors we are addressing: mobility, urban mobility, but also something called sector coupling, which in a nutshell goes towards using electric vehicles to balance spikes in the generation of renewable energies. So from a background, we come out of a big corporation. So I founded and used to lead the Daimler Mobility Blockchain Factory. Daimler Mobility used to be called Daimler Financial Services. So it's the service arm in the Daimler Group. And in there, based on the strategic analysis of where is the automotive, where is the mobility sector going, we developed what was going on at the time under the name of Daimler Mobility Blockchain Platform. And from the very beginning, we made sure of one thing: we didn't develop it in the usual kind of corporate, quote unquote, way, where you go to the Accentures, to the IBMs, or to the ThoughtWorks of the world and ask them to develop something for you. But rather, we teamed up with a number of very well-positioned startups in Germany, Evan Network, Riddle & Code, they're Austrian actually, Helix. So each one of them being very focused on specific capabilities in that area of digital identities and blockchain. And we developed this in a more or less loosely coupled network collaborative manner. And then it gets to a similar kind of setup from a result, where now we are in equity, but we're also a protocol, so a token story. We basically managed to do a spin-off in the form of a management buyout. So within Daimler, this was now, we stopped it and we said, all right, let's take the best out of it. Let's take this outside of a big corporation. We are in a decentralized ecosystem. We're in a decentralized market. Our customers will be structured in, it used to be called peer-to-peer. You can think of it as federation, but the setup is very, very different from how traditional corporates tend to function, think, and manage things. So let's take this outside. There's big investor buy-in into this technology, which is what we found out is indeed the case. We went into one of the best acceleration programs in Europe when it comes to decentralized technologies, namely Outlier Ventures. Full disclosure, I hold no shares, so I can plug them shamelessly. I get no benefit out of it. But they really taught us a new way of approaching the market. And through that help and through what we're doing now, and through the partnerships, we have partnerships now with 6, 7, 8, I think we're at 8 corporations, we managed to actually fund ourselves very rapidly. So we managed to get within the space of less than 3 months, $3 million worth of funding. But I have to say, we did it the untraditional way. So we didn't go the traditional ways. We went slightly different. And the result is that indeed now we are well funded. And that is where we stand right now. In a result, and I heard that earlier also, there is now 2 organizations in this world. One is a totally independent, orphaned, more or less you can call it a foundation. Legally speaking, it's called the CLG, and that speaks to also what we heard earlier. We needed to, out of so many reasons, we needed to put that into Singapore, which manages the protocol and the token side of things. And then there's a corporation, Power and Mobility, which for the time being is in Europe. It's established in Ireland. It's a Power and Mobility Limited out of Ireland with a German subsidiary. So that's the overall structure, and that is essentially where we stand with regards to funding and also from the background where we come from.
Thanks so much, Harry. I mean, this is it's really, really interesting to see how important it is with partnerships that you mentioned, not only in the mobility sector as well as with investors, and that you together can find a model that works for increasing your revenue and at the same time not exposing too much, perhaps your equity. Here we have also Alan Lipsis who agreed to join us, and I would like to hear from him a little bit more on the early stage development of a company, because he works for the Slovenian Work and Skill Project, which is an early phase project, and he can probably give us more perspective of a newcomer's entry into as a company, and how his research background was instrumental in developing that business. Alan, please.
Yeah, thank you. Thank you all for giving me this opportunity. As was said, I'm part of this new, what you could say, startup, Work and Skill, basically a product that was funded by European Development Fund and will be launching now at the end of the year. And we are in the middle of, starting the startup throughout this product. The product is basically a freelancing portal that is blockchain based, with added value, of course, that beside the monetary value that a freelancer gets for his work or their work, they will also get competencies based written on the blockchain as an NFTs. So they will get, for example, this continuous career portfolio that they could then showcase to other interested third parties, and those other interested third parties could then immediately know that the presented skill set is verified, since it's immutably written on blockchain. But that's the product. Why we, for example, decided, so basically my story is that I'm part of this team now 8-9 months. Before that I was in academia doing academic research in philosophy. And what I find interesting is that it's quite different presenting to interested investors than it is to be presenting to interested scientific community. Because when you're dealing with investors, I didn't know that beforehand, but now I know, they immediately expect certain things to be, for example, answerable. And when you present to a scientific community, you just present the ideas and the arguments, and you can then debate about those ideation process and so forth. But in the area of private investments and this business development, you basically need other things than ideas. So this was quite revelatory for me. But at the same time, when you figure this out, it becomes easier because there's a template. You just need to answer this typical classical questions that any investor would like to be answered, like user acquisition, go-to-market strategy, and so forth. And this is where we are now. I'm basically trying to get our product to the market. So currently I'm doing, beside the market research, I'm also doing and developing go-to-market strategy and finding other financial opportunities, especially in private, private investments. So that's with short summary of what I'm doing and what's my story.
Okay. What are your next steps? What are you looking for to develop next within your company?
Well, we are all the time. We are also identifying emerging use cases and maybe trying to see if we can, like it was said before with Harry, maybe identify opportunities for a spin-off, separate business unit that could be then presented to other parties. But currently we are developing, reach out approaches and how to get in contact with various investment opportunities. I mean, we already did like two 2-3 presentations, or what do you call it, pitches to private investors, and we are still in talks with them regarding we want to flesh out certain details. But yeah, as far as production and development, we are currently in finishing stages of this product, but on the business development side, we are always looking for opportunities to identify different use cases. Great.
Thanks for that introduction, Alan, of your story. And now we have had 3 different entrepreneurs' perspectives from France and from Germany, from Slovenia. And now it would be interesting to hear what the investors in this space have seen and observed while they've been active. I'd first like to ask Alain from Fabric Ventures, which was actually the first active company VC in the DeFi space, and that has received backing from the European Investment Fund as well. We have in the commission, as Valentina laid out in the beginning, set up a fund, one of the first pilot fund in this space in artificial intelligence and blockchain, together with the European Investment Fund, and Fabric Ventures was one of the first that co-signed investment with them. And it would be interesting to hear from Alain, who was also previously an entrepreneur, how he sees this space develop. And I think he has some interesting data points to share with us.
Sure. So Fabric is actually not specifically DeFi. It's a fund which is dedicated to backing the founders of what we call the open economy, as opposed to the centralized economic models that have underpinned the internet revolution since about 30 years. We have effectively a focus on decentralized data networks and all the applications that are built on these decentralized data networks to enable effectively a fairer distribution of incentives across the various participants to networks. So such DeFi that you mentioned rightly, Helen, is an application of these decentralized data networks, and an exciting one at that, in which we've made some interesting investments. But there's also the whole world of NFTs. There's the protocol world that Sarah Diane spoke about earlier, where we also made some investments as early as 2017. So we are effectively a fund which is a European-based fund. It's a Luxembourg-based fund. It's a 115 million euro fund dedicated to these technologies. So it's not a generalist fund with sometimes we make an investment in a blockchain or crypto related startup. No, we are totally dedicated to this new paradigm. We started to make investments in earnest in 2017. I will mention a few companies just to give a flavor of the types of investment we made. In the protocol world, we invested in Polkadot, in the Near protocol. We are on the DeFi world in 1inch, which is a decentralized exchange. We're in Messari, new forms of payment with Superfluid, the identity management and security with Orchid, and we also in some infrastructures that underpins the gaming and the non-fungible token new models that appear here. So we have Sky Mavis. We also are in this very prominent French company in the space called Sorare, with the digital collectible around football cards. So it's a mix of different investments. What's interesting is, of course, that there is obviously a much larger number of opportunities to invest in, meaning entrepreneurs building real stuff and useful things on these new protocols, on these decentralized data networks. And therefore, there's been obviously more investment interest in the space. So if I could share like a couple of stats. So Europe is for once, well, I shouldn't say for once. Europe is actually doing very well in this particular space. Now the US is still dominant in terms of the number of funds that are dedicated to the space. It's about 70% of all VC funds. But Europe represents about 24%, 25% of the actual volume of investment that is made in the space. And what's interesting is that you now see the emergence of these dedicated crypto funds, which wasn't, or blockchain funds, which wasn't the case in the last 5 years, where you had a lot of hedge funds. So I think people are quite rightly confused with the sort of this investment community in the space between hedge funds, which are basically trading on these various tokens and protocols and creating more liquid yields, and then generalist funds sometimes dabbing into this new thing called blockchain open economy, and then you have industry funds like Coinbase or Consensus. We are one of the very first dedicated funds, and there aren't that many out there, as I said, but it's coming. There are more and more, obviously, because the space is actually eating up. What I wanted to perhaps share with you is a couple of slides on where the investors are coming from, because of course, what feeds a fund, it's investment. You mentioned the EIF, which is the anchor investor of the Fabric 2021 fund, which, as I said, is 115 million fund. But of course, EIF is not alone. There's been other investors, and perhaps it would be interesting to see what is the constellation. Who are these types of, what type of investors are they? So basically, we have here a couple of stats, which is coming from our fund, but it's an illustration of where this is going. You've got here the investor type, and I'm trying to put it on the big screen, if I may. Let's see if this works here. Investor type by ticket size in a fund like ours. So the majority of the funding as a single source of fund was the EIF. But the second sort of block of investor type was family offices and fund of funds. And then you see something quite interesting, is that founders of the new economy, but also founders of the, I wouldn't like to call it the old economy, still the economy we're in, but the traditional economy are actually participating in the fund. So quite a large proportion of founders. And then what you can see here on the right-hand side is the same chart, but the breakdown is per number of investors. So you can see a bigger distribution here of high net worth individuals who are contributing to the funds. Now, let me try to get to the next slide. Here we go. Investors by geography. So the vast majority of investors come from Europe, which is also very comforting. There is an increased realization in this space in Europe of the importance of these new protocols, these new decentralized networks, and the application that are built on it. And it's not something which is seen here in Europe as, okay, that's something, once again, from the US, maybe we should look, see what happens in 5 years. There's very much a leadership, actually, a position of companies, like the companies we've heard today, the startups that actually created out of Europe. And there's also a realization by the investment community that there's something really interesting here. So Asia and US obviously are the next two in terms of investors by geography. But in Europe specifically, where does this money come from? In a fund like Fabric Ventures, you can see that outside the EIF, which is, as I said, the anchor investor, you've got the UK and Germany pretty much on the par with Switzerland, which is also home to a lot of family offices. You see France, where we have a lot of founders from France actually investing directly in the fund, whereas in Switzerland is more family office. And then we have obviously a distribution of countries, the red bit here, which is Slovenia, Slovakia, Poland, and so on and so forth. So a very large proportion of the EU countries outside Germany, France, UK. Luxembourg being a Luxembourg fund, is also a large proportion of our portfolio. So I wanted to share these stats just to give you a flavor of how the investment community is seeing these opportunities.
That's very interesting figures indeed, and encouraging, as you say. I mean, if I understood correctly, you said about globally, an estimate is about 25% of funding would be coming from the EU, whereas the data points that you particularly digged into there was on your fund, Public Ventures, and there you can see at least a big majority, 70% almost, from EU-based funding, but with healthy also co-investment from other regions, which is a good balance, I would say.
Yeah, it's a nice distribution, you can say. And also what you find is that the deal flow, as we call it in the industry, is actually coming principally from Europe. There's an incredible number of very high-level talented individuals creating startups in this space here in Europe.
Okay. No, very interesting. We can come back to a bit more, perhaps, the perspectives of how it's all developing in Europe and other geographies. But now I would like to turn to Rick now and get your perspective as well. How more broader, how deep tech space is developing. So your background is more, I understand, in artificial intelligence, and you worked with R&D in DeepMind, and you've been involved in blockchain since the very start, and I guess looking a lot on very early stage companies, and not only, as we said, in blockchain, but also in coming things like quantum and semiconductors, which is, we have heard, the scarcity these days. So what can you tell us, Rick, from your perspective?
Sure, no problem. Firstly, thank you so much for inviting me for this panel discussion. As Helen mentioned, so Speed Invest, we are not only focusing on one narrow space of deep tech. We basically cover the whole, basically agnostic, different industries falls under deep tech, space. So we primarily invest in super early stage deep tech startups. And firstly, maybe let me give a definition of what is deep tech, because these days, if you're asking many different investors, they were all giving quite different definition of deep tech. I think probably three things are quite important from our definition of deep tech. Firstly is we're always looking for there's some scientific breakthrough in technology or innovation from the startup. When I say scientific breakthrough, I don't mean you need to build another Google or something that nobody else can do, but at least the approach, the way how you handle the technology can show there are lots of innovative, which is USP that can potentially build you barrier to compete in the industry. So that's probably our first criteria. Secondly, it's quite unique for us as a Speed Invest. We basically looking for very strong barriers. So the way we assess it is, for example, if I took a team of engineers out of DeepMind or Google today, they cannot probably replicate your product within, say, for example, 6 to 12 months. So which means you definitely have some strong defensibility in the long term. And lastly is probably from funding team perspective, we're normally looking for there's a strong technical founder or some strong product person in the funding team to drive the company in the early stage, particular before you have the product market fit stage. So that's basically our definition of deep tech. Regarding deep tech, we do basically pretty much, as I said, everything from traditional, enterprise software, for example, applied AI, that's a particular focus on one vertical, to really horizontal, cutting edge research driven AI. Also, we're doing like hardware from quantum technologies to material science and semiconductors. Of course, we also look quite a lot, in blockchain and also related technologies. So I think one key thing we do have seen is, I would say in the past 2 to 3 years, deep tech is definitely becoming a hot topic, from the investment world. And particular, I would say in the AI, because with this acceleration in this industrialization and also commercialization, the development process of deep learning or AI has basically experienced a huge shift at the moment. So particular, actually, we feel there is a change from technology-driven approach which we call AI Plus, to a business-driven approach, which we call Plus AI. So basically, in the old days, when you have those technology-driven approach, which is the AI Plus business model, so research scientists and engineers first develop new and innovative technology, and then they go out to find the product market fit. So that would normally take a longer time to basically to find the relevant, applications in business. But in the last, I would say 2 or 3 years, because supported by this widening pool of AI talents and also tools available, so more and more traditional, industry are increasingly likely to consider the integration of these AI tools to be a viable way to improve, their operations. So this new phase of AI development flow, we call it Plus AI. So, and also this new model where AI development is really driven by the search of innovative ways to extract the additional value from those existing operations. So that is mainly driven by, the business demand side of things. And one really obvious example you can see is, in the deep learning, there is a very famous model called transformer. So it took almost like 3 decades to move from a publication of the technology in paper to real application. But it actually only take 2 year, process for transformer. So OpenAI built this GPT-3, which is mainly based on this transformer architecture. So that's clearly example. And this is particular really, evident in the startup landscape. So early stage, for example, deep tech or AI startup, before with this AI plus model, normally focus on the AI technologies themselves, for example, like speech recognition, image processing. And on the other hand, this AI startup with this plus AI model these days, they are more focusing on providing solutions within verticals, such as retail, finance, manufacturing, transportation, and energy. And this applies very similar to the blockchain technology as well. So that's probably one of the really key things we have seen, particularly related to the AI, area. And for us, I think one unique thing we provide to the early stage deep tech startup is we provide lots of operational side of support. So instead of just providing some strategic advice, we normally hope, try to help basically the early stage founders to quickly find the relevant use case and also the product market fit, from our, experience. So that's probably a really quick, short intro of us and also a bit of explanation from what we have seen in the deep tech landscape.
Great, that was great. Thanks a lot. Okay, now we have heard everyone's separate sort of perspective. Now I'd like to bring it a bit more into like an interactive discussion if we can, and maybe ask a few questions to our entrepreneurs to start with. How you in particular think that the ecosystems are developing in your particular area of application. Do you see them growing? Do you see there's a healthy partnerships building within the sectors? Is there perhaps also more integration between different technologies? Is there already some sort of convergence going on between different technologies like AI, blockchain, Internet of Things? Or is it still very specialized? That would be interesting to hear from each one of you. I mean, anyone who feels ready can jump in. Ari?
Yeah, so in terms of convergence, we definitely see that in the blockchain area. And by the way, I still believe, for good or for bad, we're definitely still in blockchain plus and very little in plus blockchain. But the convergence that is definitely happening in the industrial sector is that IoT and decentralized or digital identities, depending on how you want to call them, together with blockchain create now possibilities that wherever you see blockchain being utilized in the non-DeFi, so not strictly for financial protocols and not strictly for media artsy NFT style applications. So the block that I would like to call industrial blockchain, in that area you will very, very often see that at least the ecosystem that I am immersed in, it is very closely to IoT, to intelligent devices, to communicating devices that will somehow be part of a machine-to-machine ecosystem where in the future we hope to see micropayments, etc. And all of that, if you want to build it, blockchain is only a third maximum of the total solution. And for the total solution, you basically need identification and verification of your participants. And if you talk about the participants, I mean, company and customer is clear. We all know company and customer. But for the devices, so in Germany, we used to call this industry 4.0. In my opinion, we're now leapfrogging, jumping to something industry 5.0, if you do want to give it a number, where these different technologies come together, and all of a sudden these hopeful scenarios which we all had when we started talking about Industry 4.0, if you look at all the stories, why do we need 5G? Essentially, you need this fully immersive, full-blown connectivity for what? You need it for the many more billions of devices than you have humans on this planet that will then become part of a machine-to-machine economy in one form or the other. But all of this is, at the end of the day, business. These are industrial machines. So you do want to be able to attribute, okay, who contributed what? And of course, the moment you start attributing, the moment you have contributed, you obviously, okay, and now how do I get paid here? How do we settle this? And you will be dealing with micro high frequency transactions all over the place. And this convergence, that is very much what I see happening as we speak. And here the tech, and that's the good news for Europe, the tech, especially in the German-speaking countries and surrounding, seems to be incredibly far ahead. So in terms of the companies that are doing that, there's a very strong, very powerful cluster in Germany and the surrounding countries.
Interesting vision there, and that corresponds a little bit what Alain said. I mean, also the fund that what you targeted. Any other comments on that, or do you agree, Sarah, Diane, or Alan? Do you agree that this is where the development is going?
Yes, I agree with Harry, and I think in terms of ecosystem, there is also the emergence. Harry mentioned it also, but new players or existing players that are working toward the development of this area. I would like to evoke and quote France Digital, which is the largest startup association in Europe, federating 1,800 startups and more than 100 investors, and which is participating alongside 3 startup organizations in this to invest. We have also in France the creation of the ADAN, which is a crypto association, a non-profit organization. In terms of structure, like business advisor, incubator accelerators, there are also some players in France raising up. The only thing in this ecosystem that we think we have a limited support in is from the current government or institution, and we have notably identified some issues in France that after the PACT Act, which included giving an access for crypto businesses to bank accounts, that there was no enforcement of that, and we have still some big difficulties for crypto players and blockchain players to have a safe and easy in terms of operation ecosystem in terms of day-to-day running operation. So those are the missions we are tackling with those organizations like France Digital or the ADAN, to also push and make a safe space, and also which is totally complies with the regulation, of course, but ecosystem for startups. And this is going in the good way right now, but we still have some work to do. And I totally agree with what Alain said regarding the opportunity, which is represented by the blockchain and crypto. And industry and these new business models that represent new way of investing, and we see more and more investor going in that direction also.
And if I may, Helen,
sure.
Often there is in this new emerging technologies, there is a need to actually encourage people who are very technically talented to explore business models that they may not have thought of. So one of the initiatives that I wanted to mention, because maybe it's relevant here, is something we launched with a French fund called First.VC, which is called the Crypto Fellowship. Le Crypto Fellowship, very much French way of doing things. But we selected 10 applicants out of hundreds of applicants from technology background who had the experience and the potential to create something, didn't have necessarily the ideas. We selected these 10 people or teams sometimes with €100,000 each to fund effectively a year of developing a new technology. It could be a new protocol, it could be a new application, and so on. And this is proven to be extremely successful. In fact, we would like to replicate this in other countries in Europe, because this is a way of encouraging people who may not think of this new sector into doing something interesting.
Okay. So interesting. So the ecosystems are developing and seems to be doing it by themselves, but they also need some support, if I understand. I mean, this sort of organization incubation and targeted support is also still required for people to get together and actually find the partnerships and the business model that they need and the product market fit. So I understand we still need to support a little bit the ecosystem development, if I understand your points. Alan, did you want to come in here?
Yeah, I would just like to add that I also agree that there is great convergence in these technologies, since we with our product also identify that we need certain AI, I wouldn't say AI, but machine learning algorithms for matchmaking between different stakeholders. And also if we are, for example, developing a product that will guarantee that persons who are working have transparent skill sets, we need them to somehow be aligned with the current live labor data. And that's why we also need AI to, for example, curate the different labor pathways that somebody with different skill set could take. So, for example, we're talking here about machine learning recommendation system. But just to have a little bit of a general light-sided remark, because we're talking about AI, I think that AI and blockchain are also very convergent, because I'm not a doomsdayer. I'm not a doomsday sayer, but AI might present an existential risk to humanity, and blockchain could, for example, mitigate it by securing it, and developing the AI on blockchain could be like one way of securing our society.
Okay, interesting. And another thing that we discussed a little bit before also was how is the VC space? I mean, we saw the figures, we saw the type of investors and verticals and so on. We have in the commission previously estimated the sort of investment gap in Europe compared to other regions to about 4 to 5 billion a year. And then I'll talk about deep tech more broadly, more in the definition of RICS. Do you see that how the investment volume is developing? Is that enough to bridge such a gap, or what else would be needed? It's probably also for Rick and Alain, but anyone who wants to come in, please do.
I saw Harry is raising hand, so Harry, you can go first.
Okay, then we bring in Harry first. Harry, you muted.
Yeah, I have something to posit here, because if you measure the VC volume, then you're not measuring half of what's really happening. So I would posit, and I don't have the qualified research, so this is just by what I see. If you look at the biggest crypto-based propositions out there, take the Ocean Protocol, take the Energy Web Foundation, take Fetch AI, you will see that none of them have ever been touched by a VC, and they are not even going to the VCs, but rather they go fund themselves through what is very obvious for decentralized protocols. They go fund themselves on the token channel. And I would just like to throw that into the room because I very much see that. I'm quite immersed now in the true blockchain, so in the protocol economy. And I would have to look hard to find somebody who's truly in the token economy, who's even considering VC funding, or if they are, they might consider it because they didn't manage to do token raise. But if they do have a choice, they will go token and they will go crypto. And many of them don't even bother creating a company. I'm not aware whether Ocean Protocol has a company. I actually doubt it. And so that is something to bear in mind when you look at the statistics, where you look at, okay, how big is VC into blockchain? You should also look on the other side of that fence, which includes data that doesn't seem to be on the radar, maybe as it should be, in my personal opinion.
Yeah, if I may, the ICO market and other types of token offering is very much there. What you find is what we observe is that a majority of companies are actually doing a dual strategy. So they're raising equity in the early days with VCs that can help them. And then they're creating a token which they launch on the market. And VCs participate usually in both. We participate in both. So in the companies that I mentioned earlier, we both were or are equity holders as well as token holders. And the reason why these companies, not just us, by the way, but A16Z, which is a very well-known US VC, which is participating to a whole bunch of these companies with us and others, they're very much in these organizations, even the ones that, to your point, actually, Harry, could do just an ICO or something else, like Sky Mavis, in the gaming world, or some of the protocols I mentioned, or Verisat and so on, actually doing this dual thing. And I think it's because what you find is it's a complex world, and there are a need for a collaborative approach. So it's not just, for example, token design, which is mentioned, which is not as obvious as it was, or it seemed to be in 2017 when you had this ICO craze. Designing a token so that it's true economic incentives is hard. And sometimes it's not warranted. So working on that, these are things where some of the VCs like Fabric Ventures get very involved in. Smart contract audits is another aspect of what needs to be done in the industry, which very few VCs get involved in, but they should. Liquidity, provision of liquidity, so that goes outside providing equity or buying tokens. Provision of liquidity to a new protocol or a new DeFi, new DEX and so on is very much needed. Again, this is where the value add of the specialized VCs in the space is actually valued by the investors, hence the equity component.
No, that's a very good point, Alain. I mean, do you think, and Rick as well, I mean, do you think that we need much more specialization in the investment to understand, the opportunities and the combination of classical risk capital together with, like, for example, investing in assets, crypto assets? Do we need more specialization for that to be understood, or how would we otherwise go about, education or informing the larger investing community about these opportunities?
And anyone want to give a try, or if no one?
Yeah, please give it a try.
No problem. So I think from my perspective, you have to think about this question from two perspectives. Firstly, from deal perspective. When I say deal, company perspective is, for example, if you want to do crypto investment, you definitely need people, for example, like Fabric Ventures, who really understand this space. They can be specialized. They can provide relevant help, to help the company to move into next stage, right? Because without relevant industrial knowledge, it's really hard to make investment in that particular area. That's from company deal perspective. But if you think from fund level, like us, SpeedInvest, we cover a whole different range of deep tech. The reason is because firstly, definitely much bigger fund. But secondly is you have to think about the composition of the different risks as well. So what we do is we have roughly 80 people in the team. We basically put the team based on their expertise into different focusing areas. So for example, the team I'm leading and managing is the deep tech team. So we're primarily focusing on deep tech, investment. So that's why I would say from company perspective, you definitely need specialized investor, but probably for us as a VC investor from the fund level, we still want to build a horizontal team, but focusing on different sectors. I think that will give the best return from the investment perspective.
All right. Okay. No, but I think this has been very informative for me at least, and I hope that our audience as well have learned as much as I did by listening to your stories. Very much appreciate that you shared so openly what your experience and your knowledge in this field. I think we have reached somewhere from what I hear. We have reached somewhere in Europe when it comes to maturity of the deep tech ecosystem as large, and in particular then blockchain, which is still emerging. But we still have some ways to go. We still need to find more avenues of cooperation, more areas where we can go deeper into verticals like mobility and other sectors that still haven't applied, I think, or adopted blockchain very widely. We're still in infancy there compared to financial services. And we have we have the advantage of having specialized investors like Fabric Ventures and others also that really understands the companies here and can speak to them in a language that fits with what they try to achieve and the problems they try to solve. So I think that's very useful. And thank you so much. I would thank you very much for all your interventions and interesting discussion. I hope we will have an opportunity to touch base again and continue this in another way, maybe perhaps even live. I think that Alan is the only one actually at the venue right now, but hopefully soon we will all be able to meet in person. That would be lovely. I think, Valentina, if there's nothing else, Carla, we can close the session here. We're up.
No, thank you very much also from my side to all of you. And just, I think that from Slovenia, from Ljubljana, they will take the floor now.
Yes.
Okay.
Thank you very much for this great panel, and I hope that this means the beginning for stronger cooperation also in the private financing of blockchain and AI. In any case, I hope that it means the beginning also in more close cooperation between all the institutions from the previous panel and from this one. And thank you very much. And thank you, Helen, for moderating the panel and Valentina for co-preparation of the panel.